Hello guys, welcome back to my YouTube channel. Welcome back to UCL Forest YouTube channel. Should in case if you're coming across my channel for the very first time, my name is Uche Chimezie Richard. So in today's lesson, we'll be learning about change of character and break of structure. I'll be walking you through to explain to you what is change of character and break of structure and how you can mark out a proper change of character or a valid change of character and a BOS and the difference between a Choch and a BOS, and I will also explain to you what is a lower time frame change of character versus higher time frame change of character, the impact of every particular thing, and then I'll also explain to you the lower time frame BOS and the higher time frame BOS. Then finally, we'll be looking at how to go in for a buy or to sell. That is the entry model of a change of character and a BOS. It's very, very essential. Before we go straight to the chart, I will use this very particular diagram to explain to you in details of how this very particular thing works, which I know by the end of this very particular video, you will be so amazed and be very, very happy to start giving this very particular strategy a try in the forex market. And again, we will now go down to the chart to see how far this very particular thing has worked in the past. It's not just like I came here to start saying things that doesn't work. I will explain to you, or I will show you where these things has worked in the past. You could see the massive winning risk to reward ratio. So we're going to be making this, we're going to be explaining all the very particular thing in the very particular video. So what I will beg of you is please watch this video to the end, not just watch halfway, so that you could come to understand how this very particular thing work. So without not wasting much of a time, let me also introduce myself to you. My name is Uche Chemeze Richard. So I'm popularly known as UCR Forest. And in this very particular YouTube channel, I drop quality tutorial videos based on forex trading. In the past, I've dropped numerous videos which you could go and check out. And believe me, if not one or two, will be of a massive helpful guide to you because I try to make this video very interesting and very simple for you to understand. Also, if you have been looking for an online class where you are to learn forex from beginners level to advanced level and also to have a lifetime mentorship, now I'm urging you to give UCR Forex the chance to mentor you. We have been running a promo for over 2 months plus now, and this very promo is meant to end at the is meant to end at the end of the very particular year, where we are not charging the 75,000 naira anymore, but 50,000 naira. If you fail to register from now to the end of the year, you might miss out, and on January you will now start paying 75k to be part of our online class. It's not just like your usual online class where they just drop videos for you and allow you. No, in this particular online class, we try as much as we can to make sure that you understand how the particular thing work. And believe me that at the end of you being with us, you still get a lifetime mentorship. We'll be mentoring you and be giving you our signals as well, so that it will speed up your development as well. So without not wasting much of your time, let's quickly jump into a particular video to see what we have. So if you are interested, leave a comment on the comment section. I will give you a number to DM and to proceed in terms of the registration. So now we are now to proceed. So today we'll be learning about change of character and break of structure, and they want to understand how to mark out a valid change of character and a valid BOS. But before I start, I will need to explain to you that change of character is a trend reversal, is a trend watch reversal. Change of character and BOS are not the same, but those two things are very important and essential for you to know in the forex market. If you really want to succeed, you need to understand when the market has changed character and when the market has what has broke a structure. Now, let me explain to you. Within a particular diagram, you will need to understand that change of character is a trend reversal. When I mean trend reversal, it means that the whole thing has changed. It's just like you being so happy this very particular week, you are doing so well this week, or maybe this week is moving well for you, then the next week it looks like it is now becoming something else. Maybe you run into one or two problems or one or two things happen. This is can be called a change of situation of yours. Are you getting me? A change of condition or whatever. How can I just put it in a layman understanding so you can understand? So in the forex market, when the market start pushing to the upside, there's some points the market will start pushing to the downside. Like this way, when the market start pushing to the upside, there are some point the market will start pushing to the downside. So whenever the market is intending to go to the downside, that is the part that is the part that it tends to form what change of character. But when we consider BOS, this BOS will mean break of structure. BOS, break of structure. A BOS is a trend continuation. Is a trend what? Is a trend continuation. The fact you were doing well last week, or maybe or maybe you are a football fan, you are a Manchester United fan, and then you guys won last week. The upcoming week you guys won again, the next week you guys won again, you guys have been on a winning streak, and then you are so convinced that the next coming week that you guys are still going to win, and that week came, you guys won. That means that what you guys has been has continued what has continuously winning. So in terms of the forex market, this is the same way that whenever the market has broken a structure, it intends to tell you that the trend continues. The trend what? The trend continues. I've always explained to you guys that the market moves in an uptrend market, sometimes switch to a downtrend market, and sometimes switch to a consolidation phase market. So this is an uptrend market, this is an uptrend market, and this is a downtrend market, and this is the market switching towards to another uptrend market. So before the market can easily switch to a downtrend market, it need to change character. It need to do what? Change character, and then before the market can switch to an option market again, it need to what? Change character. So just understand the fact that whenever the market does this kind of thing, break a structure to the upside and then it retraces, it's trying to tell you that the trend what? Continues. A break of structure looks this way. The market will need to print a new high and will print a new low. The next thing you will see, the market moves aggressively and break that very particular structure. The moment you see the market breaking this structure, upon retracement this way, this is now when you will need to know that the market is about to buy. So I've made a video on a Fibonacci retracement to how you could measure the length of a retracement to know when to go in for a buy or to sell with a particular what, with a particular method. Although I'll be also be explaining it in a particular video. But if you need a particular tool that will help you well to know the exact point the market is going to reverse, I advise you to watch the Fibonacci retracement 2 video that I will drop the link on the description below. So when the market breaks a structure this way and then it retraces, this is now when you will know that yes, that the trend continues. And the next thing you see the market again moves aggressively and break another structure, then this is a trend what? Continuation. Another low, another high, the market breaks it, and then another low, another high, the market breaks. So when the market is returning back, you are expecting the market to respect somewhere around this zone to keep pushing to the upside. All of a sudden, the market now breaks that low. The moment you see the market breaking a low or breaking a support zone or breaking anything you call it, as long as it broke a low this way, if the market broke it, the thing is the market is telling that it is about to switch from a uptrend market to a downtrend market. So what you have to do now is to pause. You need to wait for the market to retrace to your 61% Fibonacci retracement to or your 78% Fibonacci retracement to before you start going in for a sell. So you see, the moment the market retraced, the market came back and then it sold massively. So change of character will enable you to know that the overall trend that has been pushing to the upside has switched to a downtrend. You see how we switch this very particular uptrend to a downtrend market this way. This uptrend from here is switched to a downtrend market. This downtrend market from here is switched to an uptrend market. So this is what we call a bearish change of character because it switched an uptrend market to a downtrend market. And this is what we call a bullish change of character because it switched a downtrend market to what? To an uptrend market. Let me come again. This is what we call a an uptrend, and we call this thing a bearish change of character because it switched this very particular uptrend to a downtrend market. And this is what we call a bullish change of character because it switched this very particular uptrend market to an up to a it switched this very particular downtrend market to an uptrend market. So now let's now proceed to see how we could mark out the very particular change of character on the chart because I've told you that it's a trend reversal and B always is a trend continuation. But before I proceed, I want to tell you there's something we call a lower time frame change of character and there's something we call a higher time frame change of character. A lower time frame change of character are always internal structures, are always what? Internal structure. It is normally found on 15 minutes, 30 minutes time frame. You could get it on 15 minutes and 30 minutes time frame. This will tell you very, very earlier that the trend is about to reverse. Are you getting me now? And it is not the same number of pips, it's not the same number of profit, it's not the same kind of profit that you will make on higher that you make on lower time frame change of character. It's the same profit you will make on higher time frame change of character. When the market changes character on higher time frame, it is going to be very, very massive. The market is going to buy for a long period of time than when it changes character on a lower time frame. You just need to understand that way. If the market changes character on a lower time frame, it's not going to be massive like the way the market will change character on what on higher time frame. We also look at what is lower time frame BOS and higher time frame BOS. How all those things looks like before we move into an entry model of change of character and BOS, where you have to place your stop losses and where you are to place your take profit. And we also try to break down some scenarios whereby you will see that your zones will be very big and how to refine it. So now let's quickly go to the chart to see how the particular thing works. Before I will do that, I will go to a new pair, Euro USD, and I'll try to use a new pair to explain the very particular lesson. So let's make use of the very particular chart and let's clear every single thing that is here. So everything that is here is being cleared. So clear everything. So I've cleared everything here. So the first thing that we need to do now is that before you start making change of character, you need to understand the trend of the market. You need to understand what the trend of the market. So because of the sake of this video, we will start following the market from here. We'll start following the market from here. Like we start following the market from here to see how the particular thing works. So what we will be doing now, we will be concentrating more on a higher time frame change of character. But when we spot that the zones are massive, when the market return back to the zone, we will scale down, we'll switch it to 15 minutes time frame change of character. I'll switch it to 15 minutes, then show you how it looks like on 15 minutes. Are you getting me now? So this is it on higher time frame, which is a 1 hour time frame. You could call it intraday time frame or whatever. You see how the market has been pushing to the downside. So this is you understanding the trend of the market. Whenever the market does this kind of thing, this is a BOS. This is a what? This is a BOS to the downside. This is the market breaking a what? Breaking a structure. You see? This is the what? This is the market breaking a structure. We call this thing what? BOS. And when we call this one again, as the market sold, the market retraced again, and the market sold again. We call this what again? BOS. So the moment the market break a structure, what are you looking? How do you look? How do you like? How will you enter or how will you go in for a buy or to sell? Now you have discovered that the trend of the market is in a downtrend market this way. You have discovered that the trend of the market is the downtrend market. So each time the market break a structure, you need to wait for the market to pull back to your 78% or your 61% Fibonacci retracement to before you go in for any sell or for a buy. So in this scenario, we will concentrate more on a sell and not to buy because the overall trend is what is bearish. The market is what the market is selling. So we need to concentrate more on sell than to what than to buy. So the moment we saw this BOS, what we have to do is to bring our Fibonacci retracement to. Please, if you don't really know this particular tool, I have made a video about it. Check it in the comment section. You will come to understand how this very particular tool works. We use this tool in measuring the length of a retracement, and it's very, very important, and it's very important as long as the particular topic is what is concerned. So the moment you spot that the market has break a structure, all you have to do is to wait for the market to start coming back. When the market start coming back, plot your Fibonacci retracement tool from the high down to the wall, down to the low of that very particular what retracement. You see from this high down to the low. Let me remove it again to redo it. So you see, you plot a Fibonacci retracement to from this high down to the low. You want to see the depth of that retracement. You want to see how far that market is going to come up and what and drop. So now this is how to trade for break of structure. So now you see the market now sold and broke all this low, and this is how the market is what is returning back. So you plot your feet from this high down to this low, and then all you have to do is to mark out your 78% Fibonacci retracement tool. It is very, very important you trade from the 78. If you want to know why I'm advising you to trade from the 78, look at that very particular video and you'll come to what understand. So you see this is a BOS and you saw how the market gave full retracement, tap into that zone. So all you have to do, the moment you have marked out that zone, bring your sell order or place any sell order around that zone, and then stop loss above the zone, and then take profit what to the next low. Take profit should be around the very particular around the very particular low. So you see how the very particular thing what played out here. This is how it played out, and this is how you trade for what you trade for BOS. Now the next thing again, we have had another BOS here. We have had another BOS. So what are you to do now? The same thing we did here. The same thing we did here is same thing you are going to do again here. Every time that the market break or structure, you need to wait for the market to start coming back. You need to wait for the market to start coming back before you go in for that sell or for that that buy, I mean that sell. So you see the market now sold and the market is now returning back, it's now coming back. So plot your feet from the high again down to that very particular wall, that to that very particular low. So you should concentrate more on your 78. You understand? You should concentrate more on your 78. Those that trade support and resistance maybe also be taking a trade from around this zone, but I would strictly advise you to wait for the market to return back to your 78. There are reasons to it. So this time around, the market really didn't came back to our 78% Fibonacci retracement to at a long run. But I want to tell you, there was something that really happened there. For market to start going up this way, for the market to start pushing to the upside in a particular way, there was something that really happened there. What really happened there that reversed the particular downtrend market on uptrend market is what is change of character. Change of character is really found there. For the market to start going up to head for the particular zone, it means that the market has changed character here. Now let me show you. When the market sold like this, the market tried to go up and then sellers push it down. Let me switch to 30 minutes time frame. So the moment I'm switching down to 30 minutes time frame, I am moving down to lower time frame in search of what? In search of early change of character. So you see what really happened there is what? Look at this very particular BOS here. This is a BOS. Can you see this is a BOS? This is a BOS. This is a BOS to the down. This is a BOS. So the moment you spot this BOS, you are even expecting the market not to break any high. You are not expecting the market. All you are expecting the market to do, as long as the market is selling, it should keep on it should keep on dropping like this to the downside. It doesn't need to do anything that look like this. It doesn't need to do anything that look like the moment the market breaks a high like this, the moment the market breaks the particular high, you need to know that the market has changed character and you have to wait for the market to return this way, then go in for a buy around the particular zone. So this was what really happened around here. You could see this is what really happened around there. The moment this market broke the particular low, the moment it broke the particular low, it now started going up. And then after this went up, it broke all the particular what? It broke all the particular high. Can you see? For the moment he did this kind of thing, this is what we call what? This is what we call a change of character. Yes, a change of character needed to occur so that the market could get to this your higher time frame point of interest. This change of character needed to happen so that the market can get to this your higher time frame what? Point of interest. So some people will always want to capitalize on this move. So the moment they spot this very particular thing, they will start plotting their Fibonacci retracement to look for a way to enter for a buy, to start buying to come up to a particular zone. They may be going against the trend, but they are doing the very particular thing because they have spotted what? A change of character. So how do you plot the fib when you are trying to buy? You have to plot from the low and drag it up to the what? To the high. And where is your 78%? This is your 78%. So you see, after the market did that change of character, after the very particular change of character, you saw a full retracement. So how do you go in for a buy the moment you spot this is now a bullish change of character? How do you now go in for a buy? You have to, after marking out that zone, you place your buy limit order or you wait for market to return back to there to use a confirmation like bullish engulfing or whatever, then you target the next high this way. So you see, it really played out here, right? It played out here. The next moment again, we spotted another BOS. All these things are happening on lower time frame. All these things are what are happening on lower time frame. And you could see how the market was retrace. Now let me mark it out. Let me remove the particular tool. Let me remove this. So the moment to spot the BOS, the next thing we have to do again is to wait for the market to return back to our 78% fib level, which the market started buying from here, and we plot the very particular what high. So we see where is our 78% Fibonacci retracement to? It is just here. It is here. So you see how the market return back to that 78% Fibonacci retracement tool, and then it bought. And all you have to do is whenever you mark out your zone, place your entry this way, let your stop loss be what? Let your stop loss be below, and then let your take profit be at the next what? Be at the next high. You see how we won the very particular one first? You see how we made a very good entry. We won here, we won here again. That is very simple. It's not difficult. So this is very easy way to do it. So this is another BO. This is another massive BOS to the upside. So when the market actually breaks a particular structure, where else do you need to mark out the next BOS or the next what they call it, or the next because the moment you spot a change of character, it's intend you that the market has switched from a downtrend market to an uptrend market. So this is a change of character, this is a BOS, this is a BOS. So now this is the market now returning back. So all you have to do is to replot your fee from the high to the what, to the what, to the to the up, from the low to the high, and then you mark out your 78 again. Where is your 78? This is your 78. And this is how this thing keep on what, keep on playing out. So you see how the market tap into it and what, and bought massively. So this time around, the market could not really break the very particular high. It didn't what, it didn't break this high. This is not a break of structure. This is not what, this is not really a break of structure. Are you getting me now? This is not break up, because the market did not break the very particular, did not break the very particular structure with a full bodied candle. We needed to see a full bodied candle close like this, a full bodied candle, not with a wick. We needed to see something like a full body candle. This is a full body candle. This particular thing now is a full body candle. This is a full body candle, not the very particular what, indecision candle that is closed with, not the very particular thing. The moment the market did something that look like this, it is not really a change, it is not really a BOL. It is telling you that the market just came up to take out people up around this very particular one, around this very particular zone. So it is not an ideal plan to start waiting or to start marking out your 78. So you could see what really the market did. The market could not get to that your higher time frame BO, to that your higher time frame point of interest. It started dropping massively to the downside. So even before the market started dropping this very particular to the downside, it still gave you a change of character. This is a change of character that happened there. This is a change of character. This is a change of character, because you could see when the market pushed up, the market retraced a little and then gained some little energy to break the very particular internal high that is here. So you see, and then from here the market now drop and what, and broke that very particular structure. So all you have to do is to wait for the market to start coming up just this way. As the market is returning, all you have to do is to replot your fee from that high to down to this low. Where is your 78? I believe somewhere around this zone is your 78. So this is you just keeping to the rule of trading with change of character, but in no time the market really didn't come back to that very particular zone sooner. It didn't really came back to that, or it didn't came back to that zone. So now we have had this very particular major change of character, because if you can check, we have been marking BOS to the upside, and now the market has given full time what, change of character this way. It gave this one is called internal change of character, and this one is called a major change of character, because this one is found inside the particular what one. So this is a major change of character, and then this is an internal change of character. So what we have to do is to just wait for the market to pull back to this our particular zone. Don't forget that we have a zone here we have been waiting for price work to return, and you could check that when I was doing this very particular thing, there was a very good risk to reward ratio around here. There was a good risk to reward. We made a very good risk to reward ratio around here. Our stop loss below, and our take profit should be where? Our take profit should be at the very particular what, high. So you see, and then where should be our next entry again, the very particular low, and then we will now our stop loss below, and then our take profit should be at the very particular what, high. And then where should be our next entry again. Our next entry should be somewhere around here, and our stop loss what, below. This is how you just need to be going in for a buy or to sell. So remember, this one is a change. This is how we went in for a buy around this change of character, and this is how we went in for a buy after this what, after this BOS, and this is now how we went in for another buy after we spotted another what, BOS. And this time around, the market has now broke a what, has now broke a structure. So we should just what, we should not turn our mind from no longer to buy to what, to sell. So we have to wait for the market to return back to this very particular zone. So you see, after some period of time, the market kept on selling. We had another BOS here. See another BOS. So the market what, kept on dropping to the downside and gave another what, and gave another BOS as well. This is another BOS. This is another BOS. So you see, this is another BOS. So you see, this is another BOS. And after this BOS, we saw now how the market started coming up. And then when the market came up to somewhere around this zone, before the market even started coming up like this, the market printed a new high here. It came up, it started consolidating around this zone, started consolidating. Before you know it, there was a big powerful candle that broke a short to the upside. This thing you just see here is now what we call what, a change of character. We call this what? We call this a change of character. So you see, this is a change of character, because this was our last POS, and this is the market breaking a new high. It came up and could not break the very particular structure. It tried to get down. So when the market is returning back this way, just plot your fee from the low to the what, to the very particular what high. Where is your 78? I think your 78 should be around somewhere around this zone. But I would just advise you, because I wouldn't want you to miss out on this very particular trade. You just have to keep it the very particular way to cover. When maybe when you study SMC, you will come to understand what we call a range created order block. That was what really happened around this zone. This is what really happened around this zone. So this is our change of character, and this is how the market, the full retracement, it tried to get down to that low. Buyers took it up, and after some period of time, the market came back, and you saw how the market bought massively and gave you a BOS. Now, is this thing really a BOS, or is this thing really a BOS? Let me scale back to 1 hour time frame to show you something. So this is not really a BOS. This is not really what? This is not really a BOS. The moment you saw this, the more you saw the market taking out this very particular high with a week, it is just telling you that the market just took out a liquidity around that zone. Because some people that sold here, their stop losses are resting here. So it is not really important for you to be spotting it the very particular way. So, but since you could not really admit that this is a BOS, all you have to wait is you want to see a full body candle that will close this way. Are you getting me? You want to see a full body candle that will close after this week, and another candle will form and close above it. But we didn't get something that looked like this. Instead, the market sold and then kept on buying. So we have missed out on this very particular what? We have missed out on this very particular setup first. We have missed out on it, but we didn't really miss out on it because we are keeping to our rule. Now, when the market did this kind of thing and started buying to the upside, this is number one thing they want to see. This is now when you can confirm that this is what, and this is a BOS. The reason why you are confirming that it's a BOS here is because of this full body candle. This full body candle now is above this week. This full body candle is now above this week. So you can now confirm that what really happened here is a what, is a BOS, and this is a what, a BOS. This is how a BOS need to look like, a break of structure. You need to close with a full body candle this way. So the moment you spot it, you need to wait for price to start coming back. This is now price coming back. So all you have to do is to plot your feed from the low to the what, to the high. So where is your 78? Our 78% Fibonacci is around here. So we see this is our 78% Fibonacci retracement too. And then you see how price pulled back to that very particular 78% level and what, and started buying. You see how price bought, right? So even as much as price was returning back here, price printed a new high. If you see that we have another BOS here, this is a BOS, this is a BOS, and then price printed a new high, a new low, and from here price broke a structure to the upside. You see this is a break of structure. This is a what? This is a break of structure. So this is a break of structure. So the moment you spot this very particular thing, it is no longer a break of structure. The reason why I won't call this thing a break of structure is that this is a break of structure on a downtrend, and now this is the market now breaking a new high. So it is now telling you that this overall bearish market, or even overall trend market, has switched now towards an uptrend market. So all you have to do is to replot your fib and then keep it the very particular way. Where will you be looking for to go in for a buy? You should be looking for to go in for a buy around your 78, so that your stop loss will not be what, will not be big. So you can keep it this way, remove the very particular stop, and then keep your entry the very particular way. See? So you see, and then we will now target to the upside. So you see how the very particular stuff was played out around this zone as well. We remember that the very particular zone we marked it and the market tapping, but and again we discovered another change of character that happened there. We waited for a full retracement. The same thing we keep doing over and over again, and we did not change that very particular one. We did not change that rule. So we see the market now breaking another structure again. So is this thing a BOS? No, this is not really a what? This is not really a BOS. So you need to wait for another candle to close with a full body candle, just like the way we wanted to see something that look like this. So the moment you spot something that look like this, if the market is retracing, there is no problem. All you have to wait is for let there be another buy that could break everything about this high. So you see this very particular buy went up and now broke a structure to the upside this way. This is it now. This is it. So this is now when you can confirm that this is what, that this is a BOS. The reason why you needed this very particular candle here, because this candle now close above these two high. It closes one above these two high, indicating that this is what, a proper BOS. So all we have to do is to wait for the market to start returning back so that we can sell. So I will now have to tell you that after some period of time, the market returned back to that very particular zone and sold massively. You see how the market tapped into that zone and sold massively. So this was that very particular zone that we have been waiting for a period of time. So you see how the market later came back to that zone. So this is really how to mark out a change of character. It's not really difficult. This is a change of character, and this is how the market pulled back and we went in for a buy here. Whereas the market has bought again, broke a straight to the upside. We needed a very particular full body candle, and then finally, as the market is now returning back to that zone, before the market start returning back to this your zone, maybe you must have plotted your fee from here to the very particular high. And where is your 78? Your 78 is around somewhere around this zone. This is your 78% Fibonacci retracement too. You get, so we now remove the very particular stuff. This is your 78. So the moment you do something that look like this, then you know that before the market start dropping this way, it must have given you a change of character around this zone. It must have given you what? A change of character around this zone. So what you have to do now is, if we try to break down what happened here, we had another BOS. You see, this is another BOS. Another BOS. And this time is closed with a full body candle. Don't mind the wick, but look at where the body candle was closed above it. So it's a proper BOS. Now see how the market drop, boom, and now break the very particular low with a what? With a wick. This one is not a change of, this one is not what? Is not a change of character. Is not what? Is not a change of character. After the market tapped into our point of interest, it sold and took out this low with a wick. No, you don't have to mark it as a change of character. You need to wait for this buy and this sell, and you can see after this sell, this full body candle close below this wick. It closed below it, and now see how the market is returning back. So when the market is coming back this way, just plot your fib from the high down to the wall, down to the low. So you see, and then you will now look for your 78% Fibonacci retracement tool. I believe somewhere around there is your 78, but this time around the market did not really get to that your 78. Instead, it tapped into the 61 and started dropping to the downside. But you could see that in the past, we really made enough profit with this kind, really very particular was set up. Since we missed out on this, it's just for us to wait for the market to return back to our zone and what, and keep buying. So now what I'm now telling you is that a change of character is a trend reversal, just like we spotted this year, change of character after this BOS, we spotted change of character. Even the sell that happened there was a change of character before this sell started what happening. And change of character is very, very essential because it will tell you that this very particular sell, you could see this very particular sell has switched to an uptrend market, and you could see how you can constantly be making profits with this very particular what strategy. Where we will see, if you scale down to lower time frame, you could catch it very, very early. If you go down to lower time frame, you could catch a change of character happening very early. If you're on higher time frame, you must have wait for the market to break a bigger structure like this. These are bigger structures. But you could see that what really went on, and what if you go down to 30 minutes or 15 minutes time frame, you will see that there's a change of characters inside here. There's a change of character inside here. So but in any time frame you are, it is really what is really working. All you have to do is to wait for market to break a high. When the market is returning back, then you will now go in for a buy. If it's in the case of a downtrend market, you could see how it looks like. You need to wait for the market to break a low, and when the market is returning back, you will now go in for a sell. So it is very, very simple as that. There's no difficult. So if you have any question regarding the very particular topic, please drop it on the comment section below. I'll be there to reply you, and I'll try as much as I can to explain to you in a way that will enable you to what to understand. Please don't forget to watch this video 1, 2, 3. This is the only way you can learn. You don't just watch it once and then you conclude that you don't really understand. Watch it the first and the second and the third, and believe me, you come to understand how to spot a change of character on an uptrend market and on what, on a downtrend market, and how to scale down to lower time frame to mark out a proper change of character. So I believe that you have learned something. Please don't forget to like and subscribe my YouTube. Don't forget to like and subscribe, and also turn on your notification icon to be the very first thing to be notified whenever I drop a new video. Also, don't forget to give our academy a chance to enable you to understand this thing also in a more deeper aspect. Thank you, and may God bless you.